Hello everybody, and welcome to the latest section of FOW Japan 2021. You're joining us for the Fireside Chat FinCity Tokyo, building access to the global financial world. My name's Chris Wright, I'm the Asia editor of Euromoney, and today I will be speaking with Naomi Takegoshi, the relationship manager for FinCity Tokyo. You can find a full bio of Takegoshi-san in your conference materials, but in brief, she joined FinCity Tokyo in 2019 after a 25-year career with the British Embassy in Tokyo, assisting UK companies in developing their business in Japan, a role that prepared her perfectly to contribute still further to the internationalization of Tokyo. Indeed, you may have seen her in one of the many SUM series events organized by Nikkei. Welcome, Naomi.
Thank you very much, Chris, for the introduction.
Good to have you here. To get us started, could you introduce FinCity Tokyo and tell us what it aims to achieve?
Yeah, sure. Well, FinCity Tokyo was established roughly 2 years ago in April 2019. It was established in order to deliver the Tokyo Metropolitan Governor, Yuriko Koike's vision to make Tokyo a great global financial center. So we needed a vehicle to make this happen, and FinCity Tokyo was set up as a public-private partnership between the Tokyo Metropolitan Government and now nearly 50 private sector organizations as members. And these members, they comprise of the large organizations such as the Japanese mega banks, to smaller companies, startups, and very often foreign startups who've just made it to Japan and are starting their business. So that's who we are. And to explain our remit, what we're trying to achieve. Okay, so Tokyo is a global financial center. We need to communicate this to the global audience, what our aspirations are, how we're going to achieve it, what programs there are for foreign firms to get involved. So information dissemination is crucial. So we're really grateful to the FOW organizers for giving me this opportunity today. So to communicate to the outside world about the opportunities in Tokyo and how we can help. And we do this through events, although nowadays, of course, it's primarily online, social media, tie-up activities with Japanese and international media. And then that's information dissemination. And we also collect voices from the players in the market. We try to gather voices from companies who've already entered Japan, or those who were thinking about it but have decided not to understand what impediments, challenges they're facing. And and this kind of information, it's vital to bring to the relevant people in government to make changes happen. So we put a lot of emphasis on policy recommendations. And I understand at this conference, the Financial Services Agency would also present, but the creation of their financial market entry office, which does the registration process in English language and supervision for the firms in English too, for those who've used this English language registration process. I think we can claim some credit in making it happen, as we have been voicing concerns, complaints of foreign firms who found the registration process onerous and hard going. And I've heard some really great cases, initial cases where registration has been really shortened to 2.5 months, which I think was unthinkable in the past. So kind of collecting the information, collecting concerns, feeding that to the policy development people to make a positive feedback loop for Tokyo to progress as a financial center. That's another vital thing that FinCity Tokyo does.
Great. So you spoke about how you make it easier for foreign firms to seize the opportunity, but let's talk about what that opportunity is. I mean, yes. Why is Tokyo, and indeed Japan more broadly, an attractive market for foreign firms?
Yes, well, Japan's household sector has accumulated colossal financial assets to the tune of 1,900 trillion yen. And that has been an ongoing trend. And I suppose the deflationary environment, under the deflationary environment, it made sense for Japanese savers to keep the money in cash. But of course, that's not sustainable. And with the aging demographics, people will need to prepare for post-retirement financially. Hence, there is a need for households to manage their wealth more ambitiously, I suppose, and that would include investing in different financial products. Government has been introducing measures to trigger people to think more proactively about managing their finances and investing in mutual funds, equity, etc., by providing tax breaks. So I think there's a national level of interest about what to do about this 1,900 trillion yen of colossal wealth. It shouldn't sit idly. It should be invested. And the pension funds, I think they have been also in a similar situation. Pension funds, of course, it's very difficult to have healthy yields in this current climate, and they have been diversifying their allocation quite prominently, I suppose, over the last years. The JP Morgan, they conduct annual surveys. They conduct annual surveys with 100 or so Japanese corporate pension funds to look at their asset allocation. And the most recent one, which was conducted last year and announced this year, the asset allocation for alternatives asset category, that was 22.5%, which was the highest in their past 13 surveys. And it has it has overtaken allocation to Japanese domestic bonds. So allocation to the alternative asset classes, that has been showing very steady rise, and it surely should present opportunity to foreign firms. But these trends that I've described, this is more about sourcing Japanese capital. And I think we're also seeing new movements getting fund managers invest in Japanese assets. And the climate is very favorable for that. For example, corporate governance reform, it's ongoing. And the Japanese government's policy to go carbon neutral by 2050, this will put real demand on companies to raise capital in order to put them on their decarbonization path. And investors are putting a lot of pressure. Investors, they need to adhere to ESG principles. Hence, there's a lot of pressure for firms to move to that direction. So there are, I think, very tangible investment opportunities, and we're seeing foreign firms looking more into investing in such Japanese opportunities.
There's another perspective to this, of course, which is that it's great to speak of the opportunity for foreign firms in Japan, but Japan itself, of course, faces certain challenges in achieving growth, very well remarked issues around demographics and so forth. So looking at it from that perspective, why is it important for Japan that FinCityTokyo is a success?
Yes, there's often a misconception of FinCityTokyo that it's another trade organization representing the interests of financial services, that it would only concentrate more wealth on Tokyo and increase the Tokyo region wealth gap further. It's something that only benefits Tokyo. I think we have been faced by that kind of misconceptions. But I would argue that actually attracting the financial services and investors to Tokyo, that means it's strengthening strengthening the heart of Japan to pump blood throughout the economy. And that's very much what is needed to match investment opportunities that I was talking about earlier in relation to decarbonization with foreign investors, foreign capital. And to make that happen, it's vital that Tokyo as a global financial center concept succeeds, and FinCity Tokyo to work towards it. And Tokyo as a global financial center, the vision which was deliberated under Governor Koike's panel, that was revised recently, and it went through public consultation recently. So we hope it will be properly announced this autumn. But this clearly sets Tokyo. I mean, there are several types of financial centers. One that's more very much in based on market players, trading, etc. But Tokyo, it recognizes as a center that is very much attached to real economy, and that's the direction it should be heading towards. So in that sense, connecting the investment value chain with the need for capital to make decarbonization, innovation possible, that's crucial, and for that reason, this has to succeed.
Well, the theory sounds all very promising, but how about in practice? What examples are we seeing of foreign firms moving into Japanese markets and achieving mandates here?
Yes, I was talking earlier about the shift to alternative asset categories by institutional investors. And that's a sector, I think, where we're seeing a lot of entry by foreign firms. For example, in the property category of alternative asset, big names such as M&G, Brookfield, Heinz, they've been entering Japan in the last 3 or 4 years. The Swiss firm Partners, they have been in Japan for more than 10 years. And as I was saying earlier, their initial emphasis was more on sourcing capital to be invested in higher return overseas real estate investment cases. They're now also looking at Japan as a place to invest in, and are strengthening their presence on the ground here. So a lot happening in that category. In the similar vein of alternative assets, we're seeing some movement in private equity too. The large firms who already have a Tokyo presence, they are, I think, bullish in business prospect in Japan. And also a Swedish firm, PE firm, EQT, they set up last year, I think, in Tokyo. And we're also seeing some entry by smaller or newer firms. For example, this may have been mentioned by our FSA colleagues, but Affirmative Investment Management, it's a British boutique asset management firm specializing in impact bonds. They were the first firm to be registered through the Financial Market Entry Office that I mentioned earlier. So they have been, they have latched on the opportunity of rising ESG interest in Japan, both in terms of investing, but also sourcing capital in ESG investment. So yeah, those would be some examples of companies following this trend.
Yes, and finally, it's clear that there are a number of public sector entities available to assist with making Tokyo a global financial center. Can you talk us through what they are, how they're differentiated, and what they all do?
Yeah, sure. So the Financial Services Agency, they launched their financial market entry office, as I mentioned earlier. So they would be a point of contact for firms in the investment management business to consult on registration, and they also provide more ancillary support, such as helping fund managers' families settle down in Tokyo, providing information on schools, medical services, housing, etc. So that's one. And actually, as Japan has been conscious about the foreign direct investment level, which is low compared to other developed economies, JETRO has been a promoter for attracting foreign firms into Japan. It's not just financial services, but more broadly. And they have programs to support foreign firms enter the Japanese market. So there has been, I think, a lot of government initiatives to get foreign players into this market. A lot of acronyms, and it can be a bit confusing and perplexing for foreign firms who kind of see this spaghetti ball of, lots of different names and organizations. So FinCityTokyo's role is to navigate through the various support programs that are available. And I would also like to mention the Tokyo Metropolitan Government, of course, who's behind this vision. They also have programs to support foreign firms, particularly in investment management and fintech, because those are the sectors that they want to attract good companies and build a thriving community. So for these two sectors, they have subsidy programs to help companies establish an office in Tokyo. The subsidy goes up to maximum of roughly $60,000 per firm. That's for when companies are setting up. And there is also a similar scheme to help companies who have already set up but want to expand their presence in Tokyo. So that's one financial support program by the Tokyo Metropolitan Government. And they also have a program to discover and attract some promising foreign firms, again in the investment management and fintech categories, to come to Japan. So up to 15 companies are eligible for this program, and it is being supported by Big Four consultancy firms. So essentially, firms who have been qualified for this program, they can receive support from a consultancy firm. This year it's EY for researching the market and preparing a business case for coming to Tokyo. And another program by the Tokyo Metropolitan Government is outfit called the Business Development Concierge Tokyo. It is a one-stop shop for companies in the financial services sector to consult when they want to set up an entity in Japan, in Tokyo. So these are some examples, but as I said earlier, it can be pretty confusing. So my role as relationship manager for FinCity is to have a dialogue with companies who are interested in Tokyo, identify what stage they are at, and point them to the best suited service that are available from public sector. Also, we are connected with various private sector entities who can also be good supporters for foreign firms looking to locate in Tokyo. So we can also help make introductions to the private sector ecosystem members.
Terrific. Well, best of luck with it all. We must leave it there, unfortunately, but I'd like to thank our speaker, Naomi Takegoshi, and also all of you in the audience for being here with us today. Just a reminder that this session has been recorded and will be available on demand. And with that, thanks for being with us and have a lovely day.
Thank you very much for the discussion. I very much enjoyed it. Thank you.
Thank you.